Good turnaround Tuesday, Warriors. How's everyone doing today? Stelios will co-anchor today's webinar with me. So I believe there's some central bank activity that he'll give you his insights on. So this was the triangle Grega was talking about, a lot of people looking at it. We do have it coming out of the upside here. What gives me some hesitation on this is it's Tuesday. So between Euro and Cable looks like the better fade, failing rally rather than a market that's breaking out. If the dollar's going to turn, this is very critical right down here at this 94.20 level, trying to get a reversal candle here in the Dixie. So turnaround Tuesday candidate for me would be shorting in the pound. Did a little early on this candle up here. You have to be wrong over this high, and if the dollar's going to bounce, perhaps we're going to see at least 31.30, and we get through there a little more macro, which is Stelios's gig. Maybe we get back down into this 130 level. So we'll see. Tight stops, 60 to find out if you're going to get another low. So with dollar weakness, I have to say I'm really not that impressed with the activity in the gold the last couple days. Okay, we've had two pretty strong days in the euro, and gold's made no progress. Looks like we probably have to have some type of washout under this 1210 level. If the dollar turns from here and starts heading up back towards the highs at 95.60, we should get a flush, maybe even towards 1200, but should take out this low on shorter time frames. This was a pretty deeply momentum driven low, almost confirmed on that, confirmed on the 1 hour. Can't go back that far. So we'll see everything like usual. The dollar is the linchpin, the fulcrum that the wheel spins around to make other asset classes do their thing. Speaking of asset classes, yesterday featured the NASDAQ key reversal from last week. Steve and I were being technical analysts because I said it really didn't qualify because it didn't close under the previous week's low. This is your S&P, but here was your NASDAQ key. All right, so decent follow through so far, holding this previous high here. Actually, I'd like to see Apple come out with some decent earnings. Hello, Bob. Apple comes out after the close, so we get maybe a relief rally to sell into, maybe back at 73.20 or so in NASDAQ. Still believe there's quite a bit of downside left. I think this is a significant high and that we're going to get a correction. And even if we don't take out the January lows, there's plenty of air underneath the market here. So how are you today, my co-anchor Stelios? How's it going, buddy? And also want to...
Hello, good morning.
Good morning. So we're making this face day, right? Along with our analysis, that any questions any of you have on instruments or trading technique or any question, like I've said when I mentor that there's no such thing as a silly question, only silly answers. So don't be shy, and this is your day to ask whatever you want to ask of us, market direction, what we look at, fundamentals, how to combine the two. Even we'll use our website to give you some other views on besides our own, on what guys like Grega and Blake are thinking. So why don't we start off with the BOJ, Stel? What was the result of? Yes. I see it popped, but
yes.
What happened?
Yeah, let me take the screen first. Hold on a second. Stelios, that's me. Good.
Good to know
show my
yourself.
screen. So, so we had the BOJ, which was not as you know. We said yesterday that there was a chance that they might spring a little surprise. They actually were quite mundane. They actually said that they acknowledged that inflation is probably going to take a longer time to get to their target. They revised some of their forecasts lower. They said that they're going to keep on a relatively loose policy for as long as as needed to bring inflation to target. But on the other hand, they said that they're going to start bringing forward guidance, and also they hinted that they're going to let go of their 10-year, they're targeting a 10-year yield at the moment. They said they're going to probably let that a little bit looser. So, I think from what I remember, 10-year JGB sold off a little bit. And the yen, what's the yen on today?
Up about 40 pips.
Yeah, okay, so it's not it's not a huge move, but it was a little bit disappointing, I think, because as we said yesterday, there were some rumors that they might be a little bit more aggressive, which they were not. So so that was the BOJ. Now we're still left with the Fed tomorrow, and then the big one, which is the Bank of England on Thursday. We'll talk about that. Let me start with the dollar, as I always do, because the dollar, let's face it, is driving pretty much everything at the moment. So I look at the DXY index as many people do, and this has been my view for quite some time now. And the dollar's tried to hit 96, which is I have it as a 23.6 fib level. But anyway, that region around there has shown pretty good resistance.
Yeah, 3 times, buddy.
Yes. We have to remember that the DXY index is 50% euro dollar. So there's a lot of euro in this. We've said this before, we're going to say it again, just to remind people about this. So this is my view, that I think we're just going to probably test it once more, then we're going down. Now, why do I think that? Will it be dollar weakness or euro strength? I think it's going to be a bit of both coming, going into the second half of this year. On the dollar side, we have to, what I always look at is not, how is the economy doing? What's the prospect? It's also very important. What's the market pricing? So the dollar rallied, in 2016, 2017, because the market started pricing that the Fed's going to be hiking. And obviously they did hike. So it's, we have to remember that the markets are discounting mechanisms. And it's really when the market will think something will start changing, that's where the market move is, not when they actually do hike or do cut. So what I do now is I look at the dollar, I look at the economy. The economy is doing well. We had a 4.1% GDP print, which is good. Unemployment doing fantastically. Although again, you look at the details of it, it's not great. The quality of employment is falling while the quantity of employment is rising. But the most important thing for me in terms of the dollar is, what is the market pricing? And we're pricing 2 hikes, pretty much 2 hikes for the rest of this year, just under, and 2 more for the year after. Now, if I look at what the US is doing, their policy, internal and external, the way things are being handled, I personally think that this is probably the best case scenario, rate-wise. There's just too many battles that Trump is fighting and starting. Let's not forget that. Things can go wrong, and he did issue a warning a week ago that effectively said he doesn't like that the Fed is hiking rates and slowing the economy. Again, he shouldn't really be saying it because the Fed is independent, and Mnuchin, or whatever his name is, he quickly came out and he kind of negated what Trump said. But Trump said it. So he has had a preference for a weak dollar. And that's understandable because for the last decades, the big Western, and actually not only Western, China as well, the big economies who export, they've understood that one of the ways, the easy ways to make yourself more competitive is to devalue your currency. So they're all trying to do it. And China is doing it, as we can see. The US they do not want a strong dollar. I don't think many countries want a strong currency unless they are, their exports are not as the price elasticity of their export is not like it's not the same if you're exporting oranges versus exporting financial services. There's a different elasticity. There's a different tolerance in terms of what the client, the guy who imports your products wants to pay. So, we have to put all this in the formula. And
Still, any surprises
in what, sorry?
with this Fed meeting? What people are...
tomorrow, you mean?
Yeah. Could there be?
Well, there's no rate move expected. There's no rate move expected for sure. In terms of now their statement, I don't think anybody's expecting anything really. So
no press conference?
Actually, I don't remember. I have to check that. Maybe somebody from our audience remembers that.
Yeah, guys, do you know if there's a presser tomorrow?
So, I don't, no, there isn't, Bill says.
Okay, thank you, Bill.
So, I don't think we're going to see anything in terms of from the Fed tomorrow. And so, to sum up, that's my view on the dollar overall. Now, I also said that I think the DXY is going to drop because of dollar weakness and euro strength. Now, don't get me wrong. I think the Eurozone has a lot of problems that it has to face. Because if you go back to how it was formed, what the goal was, there's a lot of good things that came out from the Eurozone, but it's very difficult to integrate so many different countries with so many different currencies. They bring them all into one, different mentalities, different productivity levels, different everything. It's very difficult. Me as a Greek, I can see this every day. We're not supposed to have the same currency as Germany. Let's face it. It's impossible. So the Eurozone has been, the euro as a currency has been around for 17 years, whatever it is. But and it's kind of muddled along. Now we're getting to a point where things are, it's a spring that has to do something. It's sprung now. It's completely in tension. We have to do something. I don't know what that's going to be, but you're seeing evidence every few months of forces that want to change this. You have Spain, with Catalonia. You have Italy, who are just out, very blatantly saying. One of the Lega Nord guys said, I think he's a minister as well. He said, it's a matter of time before Italy leaves the euro. You can't actually say that unless you think it's a possibility. If you're in this position. So I think there's a lot of aspects that are brewing in terms of the North-South divide in Europe. And, how are they going to tackle this problem? I really don't know. But coming back to this, I think short term, the euro is probably going to squeeze and is probably going to see a little rally because we've forgotten about Greece. Greece apparently is fixed. It is not, I'll tell you, because I'm, I live here. I know it is not fixed. Italy, we've forgotten about Italy as well, even though, we haven't really moved forward in terms of the political situation there. And data-wise, we've hit 2%, actually 2.1%. The print was today, year-on-year CPI. So there's a target. They've passed it, and also unemployment is dropping. It's 8%, whatever it is. That is still a high number because the southern countries have very high unemployment, but all the northern countries, and Holland and Germany and even France, they have relatively low unemployment. So economy, as an economy, the Eurozone is doing well. It's not bad, but you have all these black swan events, in my opinion, that something can just go boom, and then, how are they going to tackle them? And it's not really a monetary policy problem. You don't solve Italy by cutting rates, 100 basis points. So all these things make me a little bit worried about the euro. And but in the short term, I think that there's no reason why the euro couldn't appreciate a little bit from here, which is what we're seeing it do actually. Let's see. We have some data in 14 minutes. That's fine. So let's go back to our. So that covers the dollar broadly. Let me cover a few more pairs just to show my views, and then we can take it from there. The pound. The pound is an interesting one. This is one which I have been banging on about. Again,
Hello.
I look at what. Hello.
Hey, mate. Good morning.
Hey,
Good morning. Good morning.
How you doing?
Hi, Steve.
Keep on it. I'll be with you. I'll be with you in 15 minutes for 30 minutes, and then I have to
Okay.
to go.
Perfect.
Okay.
Perfect. Okay.
So I'll be for the last 30 minutes, and starting tomorrow, Blake is going to be with you. I'm going to be on vacation, but Blake is going to be back. He's coming back tonight. Okay. Don't forget to mention Forest Park, and
Yes.
actually we have Justin today or Trent, so they're
Yes.
going to talk about it. Okay, perfectly. See you in 15.
See you, man. So the pound. Okay, this is something that I've been banging on about for months now, and again, I look at what the prospects are, what the market's pricing in, and I have, I've said this many times. I think that obviously the main thing with the pound is the outcome of Brexit negotiations, nothing else. The economy of the UK economy, given all the uncertainty, is actually not doing badly. GDP, okay, is not stellar, but it's positive. It's growing at a slow pace, but it's still growing. Inflation is higher than target. It's 2.5%. Not only that, but earnings growth is also above target. So you have inflation and wage growth at 2.5%. They're both above target, and they have been for some time. And that's why the Bank of England has hiked once, and they're broadly anticipated to hike again on Thursday. I think around 85% chance priced in. Now, going back a step. The Brexit result is really what is going to drive the pound. Do I think that there's going to be a no deal and the UK is just going to pull the plug and go? I don't think so. Obviously, if this happens, it's going to be bearish for the pound, no doubt about it. But I think the most likely result, even if it's a halfway solution, there's going to be some kind of agreement. And if you notice, every time that there's there's a meeting between EU and UK officials, there are a lot of things discussed, but always there's something constructive said. Maybe not a big thing, but there's always something constructive. So I think eventually there's going to be some kind of agreement. The uncertainty is going to go, and then the Bank of England, which has said on every occasion that, look, this is the problem that we have at the moment, nothing else really. Unemployment is amazing. It's really low. Everything is going very well. When that's gone, I think the pound's gonna really fly. And the other thing which I always talk about is that Brexit has been priced in sterling and not in euro, and that I don't understand. The eurozone is going to lose the joint second biggest economy. Of the European countries. It's just going to go if there's a hard Brexit, I mean. So how can one side be really damaged by that and the other not damaged at all? It doesn't make any sense. So this is my view for the pound. Euro sterling in particular, I like to short anywhere above 90.90, and I've been discussing with our friends in the chat room quite a bit. Anything between 0.90 and 0.92. You see these zones here, which are I think there might be a throw over there. If there is, I'm going to get in, and I think then once the agreement is done, then we're going to see a nice downtrend in that. Okay, what else? Let's have a look at. Okay, we can talk about the commodity currencies as well, because they're quite interesting, and they are linked. Things like Norway, Canada, Australia, and New Zealand, they're all linked to commodities and to China. Others to a bigger extent, others to a smaller extent. My favorite, you probably all know this by now, dollar Norway. I have a bearish pip on, which is a little bit out of the money, like 0.3%, but I really like this. And I like Norway as a country, the way it's set up, the way it's very prudent fiscally and in every way, actually. And they also happen to be sitting on a nice chunk of oil. So, I think dollar Norway and actually euro Norway, I prefer more, but to be short that, but we don't cover that at ForexAnalytix as an instrument, but I really like that. And obviously very linked with the price of oil as well. But overall, this is one currency that I really like to be short against the dollar. And then you have currencies like the Aussie and the Kiwi, which are also linked to the to commodity prices. You know, New Zealand, they export meat and dairy, the biggest industries. And if you see, you know, technically as well, we've broken. So you know, this is something that I'm really looking at. And we have to remember also that in New Zealand they had a change of government some months ago, and the new government led by Ms. Ardern is a little bit on the how should I put it nicely, on the leftist side, let's say. So they're very they're trying to be progressive, and I think they're going to be favoring a weak currency bias. So I think that the Kiwi is going to probably keep depreciating. And my favorite instrument to go long against the Kiwi is sterling Kiwi, which I think I have somewhere here. Here it is. So sterling Kiwi. This is another one that we've been talking in the chat room about for quite some time with my friend Nitish and the others. We have this zone here. This is one I really want to be long of, both because I'm bullish sterling and also because I am bearish Kiwi in the medium term. So this one, if you have a look at this, there's a nice big zone here near 189, 190. If this gets hit again, okay, this is the view I actually thought it was going to take. It's taking its time actually going sideways, but I think if it hits this area, I'm definitely going to go and take a long around 190 or maybe even below. So this is another one that I really like. Now let's talk about bonds maybe. So we have a look at bonds. Let's see. Do we have any questions actually?
Rio, great question. Why don't you stick around for Trent or Justin? They'll be able to answer that question. Yeah. Trent or Justin.
Okay.
And they'll be with us at the top of the hour. They're asking about some Aussie fundies. You know, fundamentals of everything in Europe and the US. How about Aussie still?
Well, as I said before, you know, Australia is, let's have a look, hold on. Where is it? Australia is heavily dependent on.
Yeah, let's look at the nice looking website.
So, you know, this is what we say on Aussie, you know, it's heavily reliant on iron ore, energy, you know, 25% coal or 15% coal, petrochemicals. You know, it's very much into dependent on commodities and China, because let's face it, you know, China is one of the biggest users of iron ore and coal and all that. So they're, you know, we're the main, you know, when you talk about Australia, the main thing you should be looking at is commodities in China. And, you know, commodities have actually found a base over the past year or so. But China is still, you know, I wouldn't say in trouble, but China is still not really firing on all cylinders. And we have to take the numbers that are coming out of China with a pinch of salt, because, you know, I'm not going to go into details, but because I don't know them, but, you know, there's a broad feeling that, you know, there might not be 100% accurate. But anyway, the main thing is that China is still struggling a little bit. So you have to remember that. So, you know, in terms of commodities, I actually am bullish commodities going forward. One of the reasons is that I am bearish dollar going forward. And, you know, for all dollar denominated assets like commodities, dollar falls, by definition, you know, the price of the commodity will rise. So I think Australia, you know, if you put a gun to my head and say, you know, do you buy Aussie dollar or not, I would have said I would buy it, but, you know, this technical picture is not good. So if this hadn't broken, if we were still around, you know, 70, what is it, 78, 77, 78, 79, I would have said, yes, buy it. No, you know, I might even have gone long myself, but this technical break is quite important. I mean, I'm not a hugely proficient technical guy like, you know, Steve and Blake or Dale.
Those are clean charts. They're beautiful charts. Anyone would look at that and say, breakdown, retest, lower now.
Yeah.
So, I mean, pretty clean picture. So is there anything that would change your view on the dollar? Would a move to 97 change your view, you know, if we just had one more push? Because if you look at the daily and the euro, it even though it's probing the upside of a triangle, you know, sometimes these triangles usually go in the direction of what the previous trend was. So yeah, that action right there, and then just shake
this is
out.
a weekly, but I can see what
Yeah,
it
you
looks
see
like
what
on
I'm
daily.
talking about? You know, and it looks like you got something at 114, and then that might set up a better dollar fading opportunity. That's kind of what I have in my mind, and that might lead. If you notice, the metals have really done nothing, especially gold, with a couple of days of strength in the euro. So if the euro does that, and the Dixie, you know, pops to 96.5, 97, that could set up a you know, the final washout, at least for a trading opportunity in gold. Those are my thoughts.
Yeah, that's a very good point. You were talking about gold before, and I agree 100%. It's very frustrating. I'm personally long silver, a little bit down on this. You know, it's the 4th or 5th long I've taken the last 2 years. But you're right. You know, precious metals are doing nothing while the dollar is moving lower, and it's you know, I have no answer for that. I don't know why. You know, short-term metals, you know, I just don't understand them. You know, in terms of from, you know, one day to the next how they trade. But you are right. If the Dixie breaks above 96, which is a big level, you know, if it goes to 96.5 or something like that, and that means that the euro dollar will break below, what is it, 115 or something like that, then something will have changed. Something will have happened. Either we will have had problems in the eurozone. I don't know what it could be, but you know, something, or you know, the Fed might, or you know, Trump might get some really big wins in the trade negotiations. The Fed might indicate that they're going to hike 4 times next year. You never know. If the Dixie rises above 96, I am gonna, you know, I'm not gonna be bearish the dollar anymore, unless, you know, something changes afterwards. So because, as I said before, something must have changed for that to happen. So I will take this new information, and depending on what it is, most likely I'll probably turn neutral for the dollar. But
all right, well,
until we reach that point, I'm still bearish.
I'm enough to be dangerous when it comes to Elliott Wave, but a lot of EW, you know, wave guys would say the sideways consolidation that you have in the dollar and the euro is a wave 4, which implies one more flush. Okay, that's what Greg has too.
Yes.
All right.
Yes.
All right. See?
Yes.
So you wouldn't have even had to listen to me this morning. All you had to do last night was pull up Greg's chart, and you have it in a second instead of a lengthy, bantering 5-minute explanation by me. So this is basically, you know, how it could complete down there, and then have a much better dollar selling opportunity, and perhaps gold, you know, breaks through psychological 1200 support for that to happen.
There's a good chance.
I'm thinking 1180.
There's a very good chance, I think.
Yeah.
I think there's a very good chance that gold will break 1200, and that's going to flush quite a few people out.
Yeah. So that's kind of what I think is a possibility on the euro. So, guys, see, Scott loves your charts still. Good morning.
Okay, well, thank you. They're simple.
They're clutter-free. They're so clean. They're cleaner than you keep your car.
You haven't seen my car.
Yeah. All right. So it's, you know, if you want to continue, if there's things you have to say, but come on, you guys, this is really your opportunity. Oh yeah, Steve's going to be here in a minute, so forget it. Your opportunity is over for you to ask a lot of questions. Steve's going to probably give you a rundown for the next 30 minutes before he heads to some type of paradise, which you're already at, right? Stell, you're on vacation near a beach. How far from your home?
Yeah, I'm on vacation, about 3-hour drive from Athens, and with some friends. It's lovely, but I'm here, you know, to help out. Contrary to Blake, who just forgets about us. No, I'm kidding.
So, what's the water temperature in the ocean over there?
I don't know, but it's really warm.
Really nice. Oh God, like bath water, huh?
Actually, no, I should say it's terrible. It's really bad. Yeah, don't worry.
No, what's the color? Azure blue. All right, so pretty quiet so far. Any view on what's happening? Say, for example, I know you've been a long-term energy bull, and right since I've been with ForexAnalytix, it's been a little bit more two-sided. Wondering what your macro views may be on oil, if you think maybe 80's in the picture or something like that down the road.
Well, you remember last year I was bullish from the
40?
late 30s, early 40s. I said it's going
to. Oh, okay. Yeah.
40. I said it was going to hit 60 by year end, and it hit it on the 28th of December or something like that. That was quite lucky. I still, I think we're currently in a range here in an area where it's all quite balanced. In terms of supply. Because supply is coming in now, it's increasing. The OPEC has, they've decided to increase supply. Also, shale producers are becoming more profitable as price goes up, and they come in. Iran is now producing more. So I think supply is coming in, but that's all balanced by the kind of the unpredictability of what might happen, globally. Because let's face it, all the major wars in the past, 30 years have been driven somehow or to some extent by oil, resources in general. So there's always this danger, but on the other hand, said supply is coming in. So what do I think about the medium term, the next 6 to 8 months? Well, I think this is gonna, this is what I've drawn in my chart. I think we're gonna probably be between $60 and $75. That's my view. I know it's very wide, and many people think about the next 50 cents, but that's that's my view on it. I really don't have any big bias.
I like your low stress style. That's why you have longevity.
USD CAD breaking 130, by the way, guys.
Oh, we have numbers.
Oh yeah, and just one more question for Stel, and then Steve, you take it. Any idea of? I was reading about it. I know nothing about the Iranian currency, but from my understanding with, Trump's threats and everything, their currency has been crashing. So, I mean, that's got to, anytime a country's currency crashes, it's probably driven by, us trying to stop them from selling oil and confidence. But any idea of what's happening to the Iranian currency? I don't even know what they call it. It's not the dinar, is it? That's the Iraqi currency.
I really don't know. Sorry, I have no clue.
Who trades that, Dale? Come on.
No, it probably isn't even tradable.
The real, our friends are telling us. Thank you. I had no idea. I'm sorry.
Oh wow! Like Brazil, they have a real. Okay.
Real? No, Brazil have the real, right? It's real. Whatever, I don't know.
Oh, okay.
Yeah,
the only Real we care about is Real Madrid, so don't worry about it.
Our reality.
Yeah. By the way, guys, not only did Canadian GDP beat quite nicely, but also we had core PCE, which is what Fed looks at, and it went back down below 2%, and also revised 1.9 for last month. So it's not, not a huge move. It's 0.1%, but still below the psychological 2% target. So interesting.
Yeah.
Steve, are you going to vacation? Del?
Oh yeah, the car is already fully loaded. I have an army.
You're on the same location?
I have an army. No,
not.
Oh, okay.
I have an army. Yeah.
So you have to give up your bromance for a while and be a husband, huh?
Actually, yeah. Okay. I'm gonna have my son with me, my wife, our nanny, and her daughter, which is also a nanny. So, at least we're going to have help to relax a little bit.
Don't forget that to tell, the crowd here, the nanny also takes care of you.
Not in any weird ways. If that is what you reply.
Just wipes your chin at the dinner table and stuff like that.
Yeah, in that way it could be. Especially when I grow a little bit older, right?
So, Steve, we have a breakout in out of this triangle in the euro. Are you buying it or waiting for the close?
Huh? We don't have it. We don't have a break. Here it is. It's testing it again.
Okay.
Yeah, it's testing it. It depends on how you draw it. But no, I'm not
different angle. Yeah.
I wouldn't be buying it. I wouldn't be buying it because, as I said, 118.50 is also a very, very important resistance area. So, for me, there is no reward to risk ratio. I have to say, though, first of all, yesterday we had a morning star formation. So, yesterday's candlestick formation is a formation that points higher. So, we have to acknowledge that. And, we are making an attempt to break above the triangle. Of course, for me, it matters if it's going to get confirmed on a daily closing basis. Otherwise, I really don't care much. So, it remains to be seen. So we are seeing an attempt from the euro to rebound. Obviously, the cable is quite a lot less bullish. I mean, it still remains within this descending channel. Cable has been so much beaten that, and it's so bearish that unless we break above 133, I don't even care. I mean, I wouldn't even consider buying it as long as it trades below 133. Now, if it breaks above 133, it's a different story, because I really believe that if it breaks above 133, there is a good chance it can squeeze higher and push all the way to 136. So I might consider buying it above 133, but as long as it stays below it, I'm not even, considering it no matter what. Now, what is the most important? Yesterday we had the BOJ. BOJ did nothing. The fact that the market was expecting that the BOJ might have done something, and when we say might have done something, we obviously don't mean more to the dovish side, but somewhat, some kind of a signal that they would become a little bit less dovish. The fact that they did nothing obviously created this big rebound, this decent rebound in the USD yen. But what's most important is where this rebound came from. It actually came from this ascending channel support. Traders that are members of ForexAnalytix, they've already seen this chart before. They know that I was looking at that, the day before yesterday. And yesterday we are rebounding from there. We're currently testing this resistance area at 111.50. If we close again above 111.50, once again, I would have more of a reason to be looking higher than lower. Now, if we fail from here, then we can be talking about more downside. So USD yen, nice rebound from a very interesting support level. A couple of days ago, actually at the middle of last week, we almost tested the 50 DMA as well. This 50% fib of the last move higher at 110.65 is holding. Being a little bit more constructive than not until proven otherwise makes sense. Now, having to do with risk, we had another day lower in risk yesterday. The most important element here, because you've said it many times, Dale, NASDAQ and a few selected stocks in the NASDAQ have been the real reason why the market has been rallying so hard, at least for the last several months, if not several years. The fact that we're seeing some signs of weakness in the NASDAQ, and already two of the stocks in the NASDAQ have broken down. Keep in mind, speaking of that, I'm going to make a little bit of a parenthesis here. AAPL. I want to talk about Apple. Apple is reporting earnings today, if I'm not mistaken. Let me check. Yeah, 30th.
It is today, Steve.
Yes, it is today. And I want to show you the formation in which we find Apple at the moment, right? This looks like another ascending wedge. We got rejected 2 days ago exactly from this ascending wedge. We had overthrown it a little bit, for the duration of 3 days. So bottom line, what I'm trying to say here is, if we don't get something good from Apple, and actually Apple starts breaking lower as well, that's going to be 3 out of 4 or 4 out of 5 from the fans. And to be honest, I think that that's going to be the last straw that's going to break the camel's back. And I'm coming back to the NASDAQ. NASDAQ yesterday was testing this confluence of supports. This was the 50-day DMA, the 50 daily moving average. It was the high that we actually saw in March. It was also the ascending trendline support from this larger wedge that we're looking for, and we have actually found support here. Now, I wouldn't be surprised if the market holds this support today until the end of the day that Apple reports. But if we do see some weakness from Apple, if we do see some bad earnings or some bad guidance or anything anyhow that the market is going to consider a reason to dump Apple, I would expect that the market would gap lower from this support, in which case I think that this will open a lot more downside, at least for US stocks. Okay, so I do think that given the technical juncture in which we find the market at the moment, what Apple does today is going to be extremely significant. It's going to be of critical importance. So I think that all eyes should be turned on that. In my opinion, if Nasdaq loses this level, we're going to see a lot more weakness. And I think that S&P one way or another is going to be forced to follow lower. Now, obviously for the S&P,
I'd love to see good numbers, Steve, to give us a 2-day relief rally to sell into.
Sure, yeah, that might happen as well. But if we see some kind of a gap below that wedge, in my opinion, it's going to be a runaway gap, at least for a period. You know what I mean?
Yeah. Sure.
So having to do with the S&P, the level to watch here is like 2787 to 2792. So that little area is going to be the first significant support. In my opinion, if the market loses that, it opens quite a lot more downside. I mean, it opens literally 100 handles of downside, or this can lead all the way down to 2690, the area that I was actually warning that it's strong support. We tested it late in June. We found support there, and from that point on, we saw this rally that actually lasted for a month. So this is this will be my next target if we actually lose this 2790 area. So I do think that today can prove to be quite a significant day for US stocks. Now, having to do with the rest of the pairs, let me just very, very briefly say nothing has changed with the Aussie. It's still holding within this triangle below the 75-cent area. So, I can't possibly turn bullish as long as that's the case. Exactly the same story with the Kiwi. The equivalent level is 68.70. We remain below it, likely in a triangle. This has a very high chance of proving a continuation triangle. So nothing much to see here as well. USD CAD, after good Canadian data, retesting this horizontal support area at around 130. Quite an important level for the bulls to hold. If that breaks, I would be looking a little bit lower towards 129.50. But if we get actually below 129.50, the situation is going to start getting quite a lot more complex. Until that happens, I'm viewing this as a corrective ABC formation. I'm still short half of my initial position from 132. So, for me, if it can even collapse from here, I'll be more than happy. Regardless, as I said, my technical bias is that we might find support, quite close to where we currently are, and start another leg low higher from there. So I would be quite cautious in trying to short here. And as you see, even though we got good data and we made an attempt of breaking below 130, there is some buying happening again. So in essence, USD CAD seems to be holding this level once again. Of course, by the end of the day, we're going to know. For me, daily closing is what matters the most. So, we need to remain a little bit more patient. But I have to tell you that especially after the good data that we just got, if the USD CAD fails to close lower, I will for sure close the rest of my short position, take profits on the rest of my short position, because if after a second attempt to break lower, the USD CAD fails, and on the back of good data, I think that's a good sign that tells us that the market is trying to bottom here. Okay, now let me briefly have a look at the USD NOK and the USD SEK to show you that, first of all, the USD NOK is retesting the broken triangular support and the 50 DMA. So USD NOK also on quite significant support. So this is a level to monitor. USD SEK, same deal. It has broken below this ascending trend line, which is a first step and an important one, but it's struggling with this horizontal support area. So, I'm keeping a close eye to that. I believe that if on a daily closing basis it loses the 871 level, we should see a lot more downside. So as you see, all those pairs are actually holding on a thread. So I think that a move might, a dollar move in the right direction might actually cause all of them at the same time to break lower or to rebound from significant supports. Right now, let's have a look at crude. because I need to reiterate here that my very short-term bearish bias, and I need to make clear that short-term bearish bias hasn't changed here. I mean, I was and I remain bullish crude on the medium to long term until proven otherwise. I made money being short though in this move lower, and I do think that this rebound looks corrective for the time being. Actually, if I was a short-term trader, I would probably even consider shorting it somewhere here with, I don't know, I would probably use a stop loss somewhere like at 71 or something, and look for a move for another move lower towards 66. 66 is quite a significant confluence of multiple supports. I would be very, very skeptical in trying to short there, because we might see a big reaction from the market. But until proven otherwise, as I said, in the short term, I have no reason not to look for another leg of weakness lower. Now, having to do with metals, very briefly, because we don't have anything big here. As I said, I'm not at all convinced. I think that this MEAG rebound from gold and silver shows that weakness is the path of least resistance, remains the path of least resistance. You can see it in the price action of gold. You can see it in the price action of silver. I mean, this looks like a bear flag to me. So nothing has really changed here. Platinum is attempting to make a big rebound from here, but regardless, it remains quite bearish. So I think that the metals, until proven otherwise, and they need to do a lot to prove something differently, you have to be looking lower, as simple as that. I would want to see some type of a very big reversal candle to start considering the possibility of upside. Until that happens, I think it's it's prudent to remain very skeptical. Now, another pair that has actually already made a move. I mean, Euro USD is attempting to break above this triangle, but what has already made a move since yesterday, and I actually issued an intraday update having to do with that, is the USD Swiss, because the USD Swiss has already broken below this equivalent triangle. I mean, this looked like a bullish consolidation, and it can still prove to be a bullish consolidation, but it's not a triangle, right? So it can prove being a range. I mean, we're currently testing quite important support at 98.50. If we lose that support, then we will be looking towards 97.60, 70, somewhere there. That's going to be a very critical area of support, because actually in that area, we have multiple supports confluencing. We have this broken trend line resistance coming in there, which might act as support. We have the 200 daily moving average, which is almost there. It's converging there. And this has been an area of horizontal support resistance multiple times. So another move lower towards 97.50 isn't actually going to break the bullish bias, but definitely you don't want to see a move below that, because then technically speaking, the situation is going to become quite a lot more complex to interpret. Okay. Regardless, the fact that we broke below this ascending trend line is definitely showing us that the pair isn't ready to break out just yet. So this correction might take some more time to complete, to come into fruition, and before we actually get the resumption of the uptrend. Now, let's have a look at the euro yen, because I was actually writing yesterday in the end of the day analysis, if you saw it, the euro yen found support at quite an interesting level. I'm monitoring this ascending triangle. It can end up being a bearish pennant, or it can end up being something different. For the time being, I'm assuming this is a bearish pennant, but regardless, just look where we found support yesterday and look how strongly we're rebounding from there. That tells me that we should push at least once again towards the 131.70 area. So I wouldn't be trying to short this yet. And equivalently, and not coincidentally, the pound yen rebounded from a significant area. This, let me zoom out a little bit so you can see it. This trend line is a parallel of this larger trend line. So as you see, we found support again here. I do maintain a bearish bias as long as we remain below this bigger formation that has been broken to the downside. We have retested it twice already, and we have gotten rejected twice already from there. So, this rebound does not change my bearish bias, but definitely it keeps me from, believing that another leg lower has already begun. So I need more confirmation, and confirmation is going to come when we finally break below this intermittent ascending blue trend line. Okay, so interesting area from which both of those pairs have rebounded. That's what I wanted to show. Let me now have a look. We have 10 more minutes. Let me have a look at some questions. And then we have, are we going to have Trent or Justin with us today, by the way? Copper, yeah. There's a question about copper. I'm going to cover this. Let me see.
Justin.
Okay, Justin, perfect. Okay, the others I seem to have covered. Let's have a look at copper. Listen, copper doesn't seem to me that bearish yet, because we got a very nice reaction to the upside, and so far the move lower looks to me like a B in an ABC. So I have to be honest, the rest of the metals look quite bearish to me, but I don't know, copper looks like it wants to rebound once again before actually resuming to the downside. So I would really not be looking lower yet in copper. Not that it would be something like very weird for it to move lower from here. I mean, it has made a very bearish move. It broke lower. It first did a head fake that it would break higher. So I have no reason to be bullish in the medium term, but in the short term, I believe we might see one more leg higher towards 290, 294. Okay, so that's what I think about copper. Let's see what else.
Euro negating the breakdown out of the wedge the way I had it drawn. So
yeah,
nice.
as I told you, daily close is going to be important. Oh, let me mention here Euro pound. Euro pound, this is the third move that Euro pound is moving higher, which confirms even further that this was a retest, right? Now, the only thing missing is a break above 89.60. But as I told you 3 days ago, from a reward to risk perspective, buying euro pound there, knowing that you're going to be wrong below 88.50 was a very good reward to risk proposition, right? And, if somebody did so, you would already be, like 40, 50 pips in the money. Still, I think that 89.60 is going to be the ultimate test of if this is going to be a legitimate break higher. So depends on what kind of trading you want to do, but that's what I would be looking for. Now, euros, nothing has changed. It remains stuck for so many days now in this consolidation. Same deal with euro kiwi. You can see it here. Not coincidentally, it rebounded from a very well-defined area of support. So both of them have a better chance of resuming higher than breaking lower. So let me make that clear. They've both been consolidating in equivalent ranges for several days now. But given the fact that we entered those ranges from below, the chance of a break higher is higher than the chance of a break lower. Okay. Now let's have a look at pound Aussie and pound Kiwi. Go pound Aussie. Same situation here. As you see, we're stuck in a triangle here. Pound Kiwi. I had this as a possible little bear flag, but it might just be a little triangle, right? So you can't be 100% sure. One thing you need to take notice, and I think I wrote it in the end of the analysis, the pair is finding support here because the 50 and the 200 DMAs are confluencing here. Also, keep in mind that we are almost in the middle of a symmetrical triangle. You can see it here with red. So pound Aussie, more or less, it's a coin flip at the moment. And this is not the kind of trading I would like to do, right? I don't like to flip coins. Just giving you the whole picture. Please remind me the ticker for the 30-year, Michael. You want me to have a look at the 30-year treasuries, right? Remind me the ticker because I don't have it saved here. Let's have a look at the 10-year, by the way. Before we do that, here it is, the ZN. ZN, I have to remind you here. I think that as long as we remain below this horizontal support resistance area, we have to consider this break lower from this triangle a bearish event, and why not? We might see a push to new lows, right? Equivalently, we've been showing the 10-year yields, the fact that they're holding above this trend line, an inverted head and shoulders trend line. As long as we remain above it, I can't really turn bearish on the yields, right? So keep that in mind. The ZB. Okay, so let's have a look at it. There it is, and ZB1. Okay, yeah, I haven't had a look at them in some time, but regardless, look at this. Until proven otherwise, this is not a bullish formation. Can be a triangle from anywhere. So bottom, we don't know what kind of thing it does. Is this a triangle or something like that? Probably it's a triangle, but we don't know exactly where to draw the bottom line. But we do know where to draw the top line because we have multiple areas of resistance that confluence with the trend line if you draw it like this. So given the fact that we came in here in this kind of consolidation from higher, I think that the 30-year also has a big chance of resuming to the downside, right? One thing is for sure, unless it breaks above this descending trend line, there is no technical basis to be bullish. So, somebody, because you can always make, I like to trade probabilities and not possibilities, because possibilities are infinite, right? So, for example, somebody can say here, look at this. Somebody can say here, can't this prove to be an inverted head and shoulder formation? Sure it can. Right? Sure it can. But where would the trend, the neckline be? Exactly in what I'm proposing that is likely a triangle, right? So this can end up being a nice reversal formation, an inverted head and shoulders formation. Regardless, only break above this potential triangle, which would also be the neckline in this case, would tell me that something different is happening in this market. So you know what to monitor. The level is roughly 146. As long as we remain below 146, no reason to be looking higher. Okay. So Dale, family is waiting. We are
nice
1 minute. Okay.
Have a great time.
Thank you. Blake is going to be with you, guys and gals, in the next 12 hours. So I'm, I'm going to try to enjoy a few days, and I'll see you next Monday.
Okay, buddy. Have a great time. Enjoy. You deserve it. You designed a beautiful website for people to subscribe to. So have a safe journey, and see you next week.
Have a great interview. And by the way, hi, Justin.
Hey, Justin, I see you. I'm now making you the presenter. Thank you, Stelios, for a great job today, talking about all the major things that we should take into consideration, and your charts are great. And Justin, how are you?
Oh, can you hear me, Dale?
Yeah, we can hear you, Justin. Just want to say hi before I go. I hope you're good, mate.
I'm doing well. Hope you are as well. Enjoy wherever you're headed.
Thank you.
They go to all these different Greek paradises.
It sounds awful. Just try to make the best of it.
Please remember to say hi to Trent on my behalf.
Will do. Well, thanks for the time and opportunity to speak this morning to everyone, Dale. I just have a relatively brief presentation today that I think is helpful and apropos, given that we are on the precipice of the new ESMA regulations that are going into effect tomorrow. affecting European regulated brokers. So I'll kind of whip through here, but if you see any questions come in or you want to stop me, feel free to interrupt, and I'll happily take a detour with you and make sure that we're covering all the things that everyone listening in wants to learn.
Okay, so it's going to be very interesting to see what impact it has on volume and market structure. So looking forward to seeing what your thoughts are maybe a month into it. So we'll have to have you back again.
No, I appreciate it, and I'm happy to sort of make an educated guess at this point, and then see if I was right or wrong, and I'll own up to if I'm right or wrong.
Okay.
So in any event, today I just wanted to cover something that I think is appropriate really for all users, all traders, wherever they're located. And they're some of the things that we've noticed as a global introducing broker for the last 5+ years. So very simply titled 6 Mistakes Traders Make in Choosing a Broker. Just a brief risk disclaimer here that probably everyone has seen by now. Quick background on me. I obtained a degree in philosophy from Emory University, what feels like a lifetime ago now. I like to joke that upon graduation, none of the big philosophy companies came to recruit me, so I had to do what any other philosophy major does. I went to law school and actually obtained a JD MBA with a concentration in finance from the University of Miami, and started my career actually as a securities and commercial litigator, working for a large law firm here in Florida, but quickly realized that I was a bit more entrepreneurial than your average attorney, and was really more interested in the business world than I was in the legal world, and left that position to go and work for an FX prop firm that was run by an FX fund manager who at his peak managed about $750 million, and by volume was one of the largest FX traders in the world. And it was a great experience and exposure to trading, as well as to really the business side of trading, everything that goes into brokers and platforms and liquidity. And from there, I left and worked for a boutique broker dealer that specialized in order routing and execution for equity and equity options. And that was more experience into what happens after you click buy or sell, which a lot of people really don't understand or think about, but it is central to a lot of what we do as an introducing broker, trying to help traders find the right brokerage solution for their trading needs. In 2013, we launched Forest Park FX. We were initially regulated by the CFTC and the NFA here in the States. And then in 2017, we actually launched our UK office and became regulated by the FCA. So quick little bit about what we do. We're different than most introducing brokers, if not all introducing brokers that some of you may have come across. We are very client focused, and our objective is to basically position our clients for success. We try to align our interests with them as much as possible. And the way that we do that, or ways that we do that, are sort of numbered here. First and foremost, we really try to help traders make smarter brokerage decisions, trying to understand their needs, their strategy, the jurisdiction in which they reside, their priorities when it comes to brokers, platforms, and so on. We also try to connect them with the platforms and technology that their trading demands. So there are lots of third-party tools and resources that are available. There are programs that they might need and so on. And what we try to do is leverage our network to help them find and integrate the right technology for their trading. We provide ongoing service and support. So for those of you who have contacted Trent in the chat room, you might have a glimpse into our knowledge, our availability, and responsiveness to any questions that you have about the industry, brokers, and so on. And lastly, but very importantly, we actively work to reduce the cost of trading for our clients through negotiated lower spreads or commissions, or our cashback rebate program. So we don't charge anything for our service. We actually make it cheaper for clients to trade at a lower cost through our service. So here we go, common mistakes that we see. The first one, and really always the first one, is choosing an unregulated broker. One of my favorite sayings is return of capital is more important than return on capital. And what I mean by that is regulation is there for your protection. If you choose an unregulated broker in some dark corner of the world, they are 100% expecting you to lose money. And they are the classic term, the bucket shop, that you've probably heard. And you have all the assurances in the world that they will be a terrific broker for you when things are going poorly for your trading. They will provide great service, they will be attentive, available, they will encourage you, they'll provide you resources. But if you start winning as a trader and making money, that's when you're going to see a very different level of service. And you may find that your trade executions start to erode, meaning that you're getting lots of slippage or latency. You may find difficulty in withdrawing funds, not just profits, but your own deposits. So bear in mind, regulation is there for your protection. And first and foremost,
so Justin, they intentionally try to get rid of you by inconveniencing you through costs and everything else, because they're taking the other side of every trade you do, and it's costing them money. They don't want you anymore.
Generally speaking, that's the case. And okay. Part of the strategy that we've seen in some of these dealings is that they hope that by making it so difficult for you to communicate with them, that
you'll close.
They'll leave you with very little to no recourse, and right. You'll just become frustrated with the process and either keep trading and lose the money and then they'll be happy again, or they'll just never return your funds and you're basically stuck without much of a solution.
Yeah, it's hard to fly to the Grenadines and demand your funds, right?
Yes, and typically in those situations you have brokers who are regulated, or not regulated, but registered in one country like St. Vincent's and Grenadines. They bank in another country and they're owned by people who reside in a third country. And wow. There's just not a lot of recourse there. There's no one to go and yell at to try to seek redress for how you've been wronged. And okay. It's important to always work with a regulated broker.
Good one.
Number two is believing everything you read. I like to joke that fake news didn't start with Facebook and U.S. presidential elections. This has been going on for years and years, and as long as FX forums have been around, you have forum moderators with an agenda that promote the brands that market with them and bash the ones that don't. You have reviews that are posted by effectively ghostwriters for one broker trying to besmirch the reputation of another. You have very angry and disgruntled clients who don't really understand that a broker didn't do something wrong, that it's really the client's failure to understand how brokers' pricing and execution works. So you have a lot of noise out there, and it's very hard to really understand what's real and what's not. One example is very simple. We work with Oanda, which is a globally regulated broker. They're one of the oldest brokers around, 20 years now in the business, and they are the only major broker in the world that has not had any regulatory disciplinary action taken against it. But if you were to go to certain forums and read about them, you would think they are the absolute scum of the earth. When in reality, they've been nothing but consistent for 20 years. And they're a very good, well-run, very, very straightforward broker. So it is hard for a new trader especially to parse through it and actually find some real sort of objective information to make a brokerage decision. So we just
let me ask you about one that used to have a lot of power and a lot of credibility, and I'd like your opinion if they still do. Forex Peace Army.
Forex Peace Army, we have not encountered anything directly with them over the years that would, I guess, challenge their integrity. There are people who believe that they are
Self-serving?
Influencing, self-serving. Yeah, that would be a good term.
Okay.
We haven't encountered it. We've enjoyed a nice relationship with them over the years. We've never done any marketing. They've always treated us fairly.
Okay.
What I think happens a lot with Forex Peace Army is that it's not so much their actions as a moderator that are self-serving, but I feel that a lot of people use Forex Peace Army for their own agenda. And it's very hard as a moderator to know what's a bona fide comment or feedback based upon an experience with a broker and what is someone trying to bash the reputation of another. And I think that's a problem that all of these forums really face.
What's the most popular one out there now that people use as their #1 resource for reviews besides you guys?
I would say, I mean, Forex Peace Army is definitely the one we hear a lot. I think Forex Factory still gets a great deal of traffic. Okay. One of the venues that is picking up really a lot of traction is Reddit. There's a lot of subreddits out there that talk about FX and brokers and so on, and because it's not as publicized as much, that tends to be a bit more honest, maybe, in terms of the posters and their integrity. But there's still the usual suspects. People still gravitate ultimately to where there's a lot of information being disseminated, whether it's good information or bad. So you still also see with the finance magnates and leap rates of the world, people still look there for information as well.
Okay, what's the next one?
Next one here is not fully understanding pricing and execution models or regulations. I added that last bit about regulation just because I did want to touch on the new ESMA stuff today. But basically, if you were to talk to any professional athlete or any professional in any other walk of life, a surgeon or a lawyer or whoever, they're not just going to know the law. They're not just going to know medicine. They're also going to understand the tools of their trade. And they're going to be familiar with how you use this particular instrument or that legal precedent or this piece of technology and so on, because that is part and parcel to their success in their profession. And the same is really true for a trader. It's not just about understanding technical analysis and fundamental analysis, but you also have to understand how your broker works. How are they showing you pricing? Are they a market maker? Are they a dealing desk? Are they a straight through processing ECN firm? These things are important. And at the very base level, you want to understand the differences between an all-in spread versus a raw spread plus commission model and how that impacts your particular trading strategy. You want to know if your broker is operating a dealing desk or a non-dealing desk and how does that impact you. You also want to understand regulations or changes in regulations and how that may affect your strategy or relationship with your broker. So as I mentioned at the very outset, we are on the precipice of the new ESMA regulations which are coming in, which affect traders in a variety of different ways, but most importantly, they're a significant reduction in your leverage. And for traders who have enjoyed trading on 200 to 1 or 400 to 1 or 500 to 1 are now going to be faced with trading on leverage of 30 to 1 at max. And so you have to understand how these regulations are going to affect your open positions, how they're going to affect your new positions, your ability to continue to execute on the strategy you've been using. And so it is really important to not just focus on the charts and direction, but also to understand the tools of the trade. And this is a very important thing, especially right now, given how many traders globally are affected by the new ESMA regulations in Europe. And really the thing to take in on all of this is that life is long. Don't rush in. When you're a trader, you're out there trading with real money, your hard-earned dollars. And so take the time to understand the tools of the trade. Figure out, or try to figure out as best you can, what brokerage solution is going to be right for your particular trading strategy, because life feels really long when you make stupid mistakes and waste your money. And so we urge people to be a little bit more patient and do a little bit more research before getting started.
Okay.
Number 4 is using a platform for the wrong reasons. I'm sure you guys have all heard it at one point or another from some trader or contact that you've come into a relationship with. They will say, you must use this broker, you must use this platform, and they'll give you a host of reasons. In my opinion, you don't have to do anything. When it comes to a trading platform, they are all representations of data. 99.9% of all platforms, in my opinion, are the same. They offer virtually the same functionality. They offer the same representation of data. They offer you the same ability to manipulate charts and do the technical analysis that you want. What I think is really important when it comes to a trading platform is to not put form over substance. And what I mean by that is a trading platform should be something that is intuitive to you as a trader. And I make the analogy between using a PC or a Mac computer. My wife is a Mac user and has been for, I can't tell you how many years, and I am a PC guy. And I cannot, for the life of me, figure out how to navigate her laptop when I need to use something and I don't have my computer available. It just isn't intuitive for me. And the same really applies when it comes to a trading platform. What you want above all, in my opinion, is comfort. You want to be able to swiftly and easily navigate your platform to represent the data in a fashion that most suits your eye. You want to know how to quickly navigate the platform to enter an order, modify an order, close a position, because if you don't have that level of comfort and familiarity with your platform, there will come a time when the market goes crazy, when there's some event that really starts to move things and you are fumbling, hitting the wrong keys, pressing the wrong buttons, and will, at some point in your trading career, make a mistake. You will open a position in the wrong direction. You will fail to modify your order. You won't get that stop loss in time, and all of a sudden it's cost you money. So very important.
That's a great point that you bring up, because we're all human and we all make errors. And I hearken back to my days as an out-trade clerk on the floor of the Merc, and there was a saying, never trade an error. Okay, so if it's an error, you get out right away. Some people say, well, you know, maybe I'll keep it. That wasn't the plan. Do you have the same philosophy? Never trade an error, get out right away.
Yep, I agree with both of those, and that last point that you made, Dale, is that's a whole nother presentation when it comes to traders, but
yeah.
It's something that we see all the time where traders get married to their losers. They can't get out of a trade. I'm a big believer in the concept of thesis trading, which is you got into a trade because you had a certain thesis that you thought the market was going to do.
Not because you do volume and you have twice as many on, or you didn't intend to be short. I mean, any kind of error has nothing to do with, because you didn't have it wasn't a trade. It was a a fat finger.
You're right. It's a mistake. Cut your loss and move on. But we see a lot of lack of discipline in that regard, especially when it comes to retail traders.
I know. I've played errors, so I mean, you learn the hard way usually.
Yep.
You know, I wanted to ask you, are there traders that come to you and they say, Justin, you know, I like this broker for this reason, and I've been with them for a long time, but they may have a reason for having more than one account at different brokers. What are the reasons for people to want to have more than one account?
Generally, it's peace of mind. Look, we've seen Swiss National Bank incidents, and we've seen some bad actors in the space. And a lot of traders just like the peace of mind of having broker diversification. They like spreading their money around so that if something bad were to happen, it sort of diversifies their risk. At the same time, We see a lot of algorithmic traders will test their strategies at a variety of different brokers to see where it might be performing better.
Okay.
In other cases, we see it where traders may want to avoid, like here in the States, they may want to avoid FIFO and hedging restrictions. So they open accounts with two brokers, maybe one where they can go long and another where they can go short in the same pair.
Okay, good reason. Okay.
There's lots of reasons. Some make sense, some don't to me. Sometimes traders have different strategies. If you're working on a strategy that's maybe very large size and swing trading in nature, then you might want to be with a certain type of firm. And if you have another strategy, which is a scalping one, you may want to focus on a broker that provides much tighter pricing and still very fast execution, because you're more price sensitive in that strategy. So there's a variety of reasons, and
Do many do it?
Many do it, yes. I would say we've got thousands and thousands of clients. I would say probably 30% have accounts at more than one broker.
Okay, so therefore, if that many people are doing it, it could be a good idea for people to consider hearing our voices today. Okay, what's number 5, buddy?
Number 5, putting a good strategy to work in a bad environment. This kind of comes right on the heels of what I just mentioned a moment ago, Dale. But sort of the adage, don't stick a round peg in a square hole. Every strategy, or not, I shouldn't say every strategy, but strategies are different from one another. If you have a longer-term swing strategy as opposed to a short-term scalping strategy, not every broker is going to be right for that trading strategy. So if you were to look at, say, Anda, go back to them, they're great at a lot of things. Very, very tight cost of trading, not one of them. So for someone who is more price sensitive, you're going to want to focus on brokers that can provide tighter pricing if it's available to you. Conversely, if you have a strategy that let's say is longer term in nature and you're not really looking for tight pricing because you're not really price sensitive, but what you do want is price consistency. You don't want to work with a broker where spreads widen considerably around news events or low liquidity or rollover, because you don't want your trade to get knocked out over a momentary widening of spread. You just want to let it mature over time and ultimately gravitate towards your take profit or your stop loss. So there's different reasons to work with one broker over another. And really, you have to understand your strategy to make the right marriage. And as part of what we do is we try to take a consultative approach with our clients, understand their strategy, their trading needs, what's working for their strategy, what's not, where their vulnerabilities are, and take into account all of those factors and try to find the right broker or brokers that we think will best suit that strategy long term.
Okay, and wrap it up.
The last one is basically a bit of a self-serving one, but it does have value and merit nonetheless, and that is not using a value-adding introducing broker. When you deal with brokers directly, they have biases. They want to earn your business. They're not likely to speak fairly and objectively about their competitors because they want to earn your business, and that particular salesman wants to earn your business because that's likely how he's going to be judged as a salesperson or maybe even compensated. So what's important is to try to seek objective analysis. And one of the ways that you can do that is to work with a firm like Forest Park and avail yourself of our experience, our strong brokerage relationships, and the value we add in trying to help you find the right broker for your trading needs and reducing your costs of trading in the process. So just quickly how we can help, and then Dale, I'm happy to turn over to any questions that you or the audience has. But again, we provide broker agnostic recommendations. We're not going to stick a round peg in a square hole. We're going to try to find the right fit for you as a trader. We're going to reduce your cost of trading with cashback rebates or lower spreads and commissions. And we're going to provide ongoing broker, platform, legal, regulatory, and industry support and service. So basically any question that you have outside of should I buy or should I sell, we can answer. We'll leave the trading and analysis to you guys, and we'll come up with, we'll be the resource and support network for your traders with all of their other questions.
Okay, I have
Sure.
have 3. Oh, are you?
Sure.
I thought you might have been through. Go ahead.
I just have, I think, just 1 or 2 more slides, maybe another minute. I just wanted to sort of illustrate what are cashback rebates, so people who are not familiar with that can just have an understanding. So Forest Park FX is a globally regulated introducing broker, and we work with really some of the top brokers in the world, and I'll show you that list shortly. But what makes us different is that we're not a mere pass-through IB that just sort of hosts a website, and we certainly don't increase your cost of trading in any way. We are a pure value-add resource to you in terms of choosing a broker, but in a more tangible sense, we actively reduce your cost of trading, and this infographic on the right kind of walks you through that. It may be a little tough for those to read because the font is a little bit small, but basically what it does is it walks you through a typical Forex account on the left, and in this example we use opening account with Forex.com, where there's an assumption that you trade the pound on a spread of 2 pips, you trade 2 lots a day, and at the end of the month you have all your P&L from that month and that trading. On the right is the process of working through our rebate program, which is instead of just going to Forex.com directly, you first come through our website, you register, and then you ultimately choose from our list of brokers to open a Forex.com account where you're redirected to their application page. You open your account, you fund it, you trade on the exact same spreads as you would if you opened your account directly with Forex.com. You trade exactly the same volume and get the same executions. And at the end of the month, you have your P&L from trading, but you also have the cashback rebates from us. And in this example on the infographic, if you traded 2 lots a month, I'm sorry, two lots per day on average, at the end of the month, you would have an additional $84 in your account just based upon your trading volume. And there's no catch, no strings, no minimums that go along with it. It's literally free money that everyone should take advantage of. And just 2 more slides here for you, Dale. These are just the brokers we work with. In the US, we work with Oanda and Forex.com. For those that are interested, sometime hopefully late this year, IG will be re-entering the US space, and we're already in talks with them, and will be probably their first papered introducing broker.
Okay, I heard they're coming back, but mainly with binaries. Are they coming back the other way too?
Nope, they have binaries. They own Nadex here in the US, but they actually are in the application phase right now with the CFTC and the NFA to launch a retail FX brokerage that will compete with Oanda and Forex.com, and we're happy to have them, and we'll make them available to our clients.
Okay.
And then outside the US, we work with really some of the biggest brokers that exist, and a lot of names that you'll probably recognize. Somehow in looking at this, we're missing one of our brokers, which is IC Markets, but we also work with them. But you'll see a lot of big names here, and we do a lot of due diligence on our brokers to make sure that they provide a fair and equitable trading environment for our clients. In fact, with the brokers on this page, I think I've actually visited the offices of all but 2 of them. So we do a lot of travel, a lot of due diligence, and these are some really good places to trade. Not the only good places, but certainly ones where we've been able to ensure that our clients have a very positive trading experience.
Okay, and none of these take U.S.
I'm sorry?
None of those take U.S. clients.
No, we don't work with any broker that is not regulated by the CFTC and the NFA that accepts U.S. clients is doing so basically in contravention of law, and we avoid them like the plague. And we encourage traders, U.S. and non-U.S., honestly, to do the same, because it's a very short-sighted business model. And a lot of times those brokers literally just disappear one day, again, leaving you with very little recourse if you have funds with them.
Okay. I have some questions for you. Do we trade against a broker or against a common market? Mohammed wants to know.
That will depend on the
broker.
the broker that you choose. Some brokers are dealing desks or market makers. Others are non-dealing desk brokers that are facilitating your orders and passing them through to liquidity providers that they're aggregating for you. So it really just depends on the broker you choose.
Okay.
Dealing desk broker, just for clarity, is not necessarily a bad trading venue. Sometimes it's the right trading venue for a particular style of trading. You just have to know that you're dealing with a dealing desk or a market maker that's actually running a legitimate book and not actively trading against its clients.
How can U.S. residents get ForexAnalytix rebates? Is there any offshore brokers U.S. residents can use to trade CFDs? I think we answered that.
Yep, on the first question, regulations don't allow things like reimbursement programs, but for clients that reside in the U.S., they are welcome to open or move their account underneath our group with either Forex.com or Oanda and participate in our rebate program, which should help to subsidize the ForexAnalytix subscription. With regard to the second question, we kind of just covered that. I would really caution any U.S. person from opening an account with a broker that offers CFDs, because again, they're doing so in direct contravention of regulation and law.
Yeah. Do you guys help with brokers here in the UK?
Yes, absolutely.
Okay, Manny, give Justin a call. Right there is its number and email. They'll be able to help you. Can FX be traded through a retirement account?
Yes, it can. We have a lot of experience in that. In fact, we just authored like 5 articles earlier in the year talking about what that process entails. It's actually quite straightforward if you know how to do it, and we do, and I'd be happy to assist anyone that is interested in trading through a retirement account, and that applies to traditional IRA, Roth IRA, SEP IRA. You could even trade through like a 529 plan that you've set up for your kids' college fund. There's lots of different ways to use those sort of tax-advantaged accounts for self-directed trading, and we can definitely assist with that.
Okay, great. And Bill Morrison's follow-up question must have been on rebates. What if you already have an Oanda account?
If you already have an Oanda account, in some instances we can get your existing account underneath our group. I would encourage Bill to just shoot me a quick email or give me a call once we conclude here, and I can explore the possibility of working with him to reduce his cost of trading there.
Great having you with us today, Justin.
Thanks as always, Dale. Pleasure, and thanks again for the opportunity.
Yeah, always great to hear a calm person and having the demeanor, and also I could tell your heart is really into being for the people. So appreciate you being here with us today. Proud to have you as our sponsor here at ForexAnalytix, Justin. Thank you very much.
Thanks again, Dale. Take care.
All right. Okay, everybody, that's Turnaround Tuesday. The pound short did work. I came out a little bit early at 50, but from 64, you had 34 pips, maybe a little bit more. We're getting this rally prior to Apple. Let's see what happens after the close, and good hunting the rest of the day. Looking forward to having Blake Morrow back with us tomorrow. And remember, most of all, don't just count your pips, count your blessings. See everyone tomorrow. Adios.